When you make the decision to buy gold, there are 7 risk factors you need to consider. Number 1, counterparty risk. Perhaps the most important attribute of gold is that it carries no counterparty risk. You are not dependent on any other person or entity when you own gold. There is no stockbroker or bank that can go broke. There is no government institution where you must register your title to prove ownership. Gold isn't a share in a company that can fail. There is no way that gold can be copied or resold, and there is no exchange or clearinghouse that can close its doors on you. But some ways of investing in gold relinquish the crucial advantage of not having counterparty risk. For example, investors in gold futures discovered a company called MF Global had tricked them out of their investments when the brokerage went bust in 2011. If the absence of counterparty risk is a significant concern, then you should consider a direct investment in physical bullion stored in a safe or a non-financial institution. Number 2, costs. Don't invest or risk money you can't afford to lose. I don't recommend you ever borrow money to buy an investment, although I know some financial advisors do recommend this. Also, never put all your money into one investment, whether it's gold or any other stock. Instead, consider what some financial professionals call position sizing. In a nutshell, it means don't put more than 5% of your assets in any one investment. Number 3, storage. If you're looking to invest in physical gold, storage does become important. Most people looking to take delivery are the kind who don't trust the financial system. So, stick with non-financial institutions if you wish to keep your gold secure. There are plenty of vault and storage options around Australia, but it's best to choose one near you. If you choose to keep your gold at home in a safe or some other safe place, don't talk about it, not to anyone. That can be difficult for a passionate gold investor, but it can end up being the source of plenty of sleepless nights if people know where your gold is kept. There are many websites dedicated to hiding gold in your home. One surprising suggestion is to paint a gold bar black and use it as a doorstop. That sort of simple trick might be a terrible idea for one person, but a suitable solution for another. Number 4, fraud and scams. The world of gold features plenty of unsavory people, businesses and practices. It is crucially important to seek out the most reputable institutions selling the most reputable versions of whichever type of gold investment you decide on, and then remain as suspicious as ever. One famous gold investor, Peter Schiff, started his own gold sales company after discovering the extent of questionable sales techniques used by many retail gold companies. He also released a free report on common gold selling scams and how to avoid them. The best way to avoid these kinds of problems is to do your own research and stick to the decision of what you want to purchase. Don't be led astray by salespeople. Number 5, purchase plans. Some of the wealthiest gold investors in the world regularly purchase a small amount of gold. This has several advantages, but can be inefficient in terms of costs. Other people make large investments and hold on no matter what the price is doing. Then there are gold traders who buy in and sell out of gold-related investments, seeking to leverage the underlying asset price. Consider how you want to make your gold investment in terms of timing, how much gold and how long you want to keep the investment. This may favour some types of investments over others. Number 6, confiscation. Because of gold's history as a monetary asset that competes with government-issued paper money, it has been confiscated by governments in the past. It's true, ownership of physical gold was actually made illegal in the United States in 1933. Thankfully, this didn't last. The history of gold confiscation is fascinating, but here is the practical consideration for gold investors. We are not on a gold standard, a monetary system based on the value of gold. So there is little to be gained for governments in the confiscation of gold over any other asset. And any return to the gold standard, while gathering momentum in some circles, still looks to be a way off. Of course, if you are concerned, it is possible to own gold overseas or other places where the government might not be able to find and access it. Number 7, the paper market. Much of what constitutes buying and selling of gold today isn't actually dealing with real gold. It's just an agreement to settle in cash based on what the gold price does. But this paper trading has come to dominate the real price of gold. This is a bizarre point to grasp at first, but financial markets gold exchanges don't deal with much physical gold, at least not compared to how much imaginary gold is traded each day. At some point, gold buyers will discover that buying paper contracts, which claim to represent gold, is no substitute for owning real gold. There will be a scramble for the tangible gold investments when people realise that the supply of gold they thought existed was really just a paper betting scheme. That will cause the gold price to explode. But when this will happen, if it does, is very difficult to predict. In the meantime, you should be aware of how the price of paper gold can dominate the price of physical gold. Those are some of the factors and considerations you need to keep in mind when buying gold, whether it's shares, bullion, coins, or certificates.